Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, November the 10th. Let's talk trading. I got a question. Somebody said something about, the how to trade it. That I'm having a problem with that. What's the trick? How do you do it? Well, I mean, it's funny. It can be answered in lots of different ways because we have to understand what the question is. How to trade it. That could be, maybe it's a particular method. Maybe it's like, well, how do you trade this particular pair the best? So I'll try to explore the possibilities to make sure I answer the question so people can understand it. So let's just dive right into it. If you've been watching the videos this week, and if you haven't, shame on you. If you go back to the first video of the week, I talked about the weekly open, the weekly gap, and that particular trade. So let's switch over to weekly, and let's see. Let's use this little tool right here. Let's take this line and let's pop it right there at the weekly open. Now I'm doing it this way because so people think I'm trying to hawk my indicators. It's just like, no, not really. Don't have to worry about that, guys. Come on. So the open, 113.99. That's the weekly open. Okay, well, we can see that price had made a weekly high, and then price made a weekly low, and then price is right here. Okay? So let's flip it over to the daily chart. Now we go back. We got Friday, Thursday, Wednesday, Tuesday, Monday. So right here, price made a new high compared to there, but it didn't hold it. And then the next day, price didn't even get back to this level. Which way is price going? So it's simple to see, taking the weekly open, had you traded in the direction price was moving at that line, there was profit to be made. Do you see that? So here, even on Tuesday, had you gone long at the weekly open, you would have had a chance to make how many pips here? I hate it. Let's see, 33, about 33 pips. Call it 30 pips. Taking that long trade. But as you can see here, price went up and returned. So if you have a level, in this case the weekly open, you want to trade or in the direction of the last cross. So if it crossed down, you want to be short. If it last cross was up, you want to be long. That's simple. So that's how you trade it. There's no magic to it. I mean, are you going to win every time? No. Because if you could, then there'd be no market. In a very short period of time, you'd have it all. So, and I think, was it yesterday, we talked about position sizing and risk. So, hopefully, if you get in a trade and maybe if you're risking 2%, the worst thing that can happen is you have a 2% loss on that trade. But I believe the question also said something about he was getting 10 pip losses and he was only getting something like, 3-5 pip wins. So it was basically, dancing madly backwards, if anybody remembers that song. So it's like, well, how do you avoid that? Well, there could be a multitude of trading things going on, problems. Over trading, not waiting for the best opportunity. I mean, that's one of the things that a lot of people do. They just don't wait for the best opportunity. They rush the trade. They think. You're not supposed to think, you're supposed to see, observe, react, execute in the moment. Sometimes they're trading multiple pairs, where if they just stick with one pair, it'll put the odds in their favor if they have a statistically sound trading method. But if you go back and forth, each pair is going to have a different return. And so you're saying, hopefully, when I switch and I go to this pair, hopefully I'm going to, catch that winning trade. As opposed to saying, well, right now the dollar yen isn't in a position for me to trade, so I'll just wait. Just have that, that finger on the trigger. Just can't wait to click the mouse. Get in that trade. But if you remember some of my older videos, I mean, trading is pretty much about 99% waiting. You wait to enter and you wait to exit, because the actual entry or exiting is usually done in a second or two, maybe even less. So it's just waiting. I mean, if we take this same level here and we look at it on the H1, what I think I need is the M candles indicator here. Where did that go? Or candles M? Yeah, I think that's it. Can we do 1440? Yes, we can. And we can move the chart shift over. So yeah, here we go. Friday, Thursday, Wednesday, Tuesday, Monday. So you can see here's the weekly open. And you see all the opportunities you had to trade. So for example, if you had taken this short right here, and let's see, where did that low, 95, if you got in at 99, you had a chance to maybe pick up 2 pips. And depending on where your stop loss was and your position size, you don't know. So maybe you said, well, you know what, I'm in it for the week, and so I'll size it so long as it doesn't go past this high, doesn't make a new high, I think it's going lower. And it could have been a nice trade if you hung in. You probably could have made about 70 pips if you had exited somewhere down here. So, it's how to trade. How to trade, that is the question. How to trade it. Well, you just have to remember that just because you put the trade on, it's not going to win. Once you put the trade on, it's up to the market. What you have to do, how to trade it is you pick a pair, you pick a method, and then you stick with the method. You make sure that every time you click the mouse, it's a flawless entry or exit. And you make sure you don't miss a click. So there's no shoulda, coulda, wouldas. You don't try to outthink the method. No, I'm not going to take the entry this time, even though all my trade triggers are set up because I think. No. If you remember, I don't know if I did a video on this or not, but one of my old posts, I talked about, basically being a monkey, and with the banana, you execute right, you get the banana. In other words, you just do what you're taught to do. No thinking. And that's why so many people write EAs. So the EA will execute exactly the method as it's supposed to be. Some people don't trust EAs. I kind of fall in that column, even though I have written a couple just to mess with for my own education, just to see. I mean, it's just another tool. Some people know how to use the tool. Some people don't. Some people like a particular tool. Some people don't like a particular tool. It's up to you, the trader. It's your portfolio, your money. So that's pretty much it. You see, the actual trading, there's really not that much you do. I mean, you can sit there and analyze charts till the cows come home, but that really doesn't do anything. I mean, you unless that's your method. If your method is analyzing charts and trying to find that one spot where you should enter and that one spot where you should exit, well, have at it. That's okay. But as I've shown here, just this one simple weekly trade here, that weekly line, it gave you an opportunity to trade it on the Monday and then on Tuesday. And I guess technically right there on Wednesday you had a trade, and Thursday you had a trade, and so far today, no. You probably may still be in the trade or have exited the trade. So there you have it. That's how you trade it. That's one way, using this one particular horizontal line. But it doesn't matter. You can put that line anywhere, but the deal is pretty much the same. And you pick your pair, you pick your method, you execute the method flawlessly, you don't miss a trade, you don't overtrade. And then you wait and see if the market rewards you or not. You size your position accordingly, you place your stop accordingly. I mean, that's how you trade it. There's nothing magical, nothing esoteric, and as always, no squiggly lines were harmed in the making of this video. So, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne, signing off to go drain the banks.